Hey everyone, how's everyone doing? Can everyone hear me? Hey, Yamilu, Bob, nice to see you guys. Just testing, making sure that everyone can hear me. All good. Kanemba, nice to see you. Loud and clear, loud and clear. Very nice. Hey Robin, nice to see you as usual. One of the first, right? One of the first. Clinton, nice to see you too. Ellen, nice to see you. Right. Thanks for tuning in nice and early, guys. Right. Let's see all the usual names coming in over here. Right, we've got Jean Banis too. Kelvin, nice to see you. I can see you hiding behind. Arkibong, nice to see you. Right. Anyone here for first time though? Yen Chong, nice to see you too. Moses, right? Nice to see you. Diana, nice to see you. Yeah, anyone here for the first time? Is anyone here attending this webinar for the first time? Ajay, my loyal loyal webinar attending, nice to see you. Clinton, it's your first time. Welcome, welcome. Nice to see you here, man. Right. Hope you enjoyed today's webinar. Right. It's part of a long-running series that we do with IC Markets. Right. So every Tuesday, without fail, right, same time, same place, we do an educational session. Then Wednesday, we do a live trading session. All right. Yeah, Wyckoff is the first time. I'll be introducing a special guest later, right? Someone who has recently joined us, and his knowledge and his, I would say, obsession with Wyckoff is something which you guys need to learn from, right? It's really, really interesting, right? So I'll be introducing him in a minute, all right? Because it's one of the rare times where I feel that someone is able to teach this particular topic better than me, right? Or rather, any topic, right? So he's clearly has a lot to, for example, I'm really good with Fibonacci, edit wave, right? But I think it's pretty good with Wyckoff. So you guys are gonna have a fun time today, really intense, right? You'll notice that the upcoming trading series that we have with IC Markets, we are diving a lot deeper into different kind of trading strategies. Today's Wyckoff, next week is the Davos box, right? We're gonna look at different ones. If you have a request on a certain kind of trading strategy that you want us to look at, let me know, right? I'll do my best to kind of arrange it for us to kind of go through it together. Simon, nice to see you, right? And nice to see you tuning in nice and early, all right? Yeah, if you guys have any requests, please let me know. Anne Marie, nice to see you here too. I can see you in the background. All right. Yes, Arkibong, do you mean smart money or something? Right. So since we got a couple of new people here, right? A few places that you must head to for sure, right? I'm going to send you guys a link, right? One is our IC Markets webinar playlist over here. I'm going to paste it for you guys over here. Okay, please go check it out if you have the chance, right? Work your way all the way from the bottom, all the way to the top, right? We're sending 6 webinars now, a lot of webinars along the way, correct? And the great thing about it is that, you know, you don't need to spend $3,000, $10,000, you know, on some guru that's going to teach you some, you know, some trading concept, right? You can go through these webinars here and we cover a lot of it in depth with a lot of people pouring in the testimonials, right? From an unprofitable to a profitable trader, low hit rate to a high hit rate, 40%, 60% hit rate, you know, a lot of testimonials pouring in, right? A lot of you guys have passed your funded trade test too, right? It's music to my ears, right? I want to encourage you guys that you just need to learn the right things, right? And a lot of it is not so much the strategy, but what goes on after you apply the strategy. The trading psychology, the trade management, the risk management, all these are important things that really help you become a better trader, right? Okay, we got Radoslaw. They are pronounced the name correctly, right? First time from Poland. Nice to see you, right? I hope to visit Poland one day too. If you ever visit Singapore, let me know, all right? Yeah, so this is the first place that you want to go to, right? The webinar. This is the webinar playlist, right? The next place that you want to go to, right, which I'm going to direct you guys to, is all the upcoming webinars. You can find it under, it's over here. Yeah, webinar over here. IC Markets More webinar, right? Of course, there you go. So yeah, you know, we do a lot of the English webinars, right? But you can pick this part where you click English webinars. You can see some of the ones that we're doing, right? Next week will be the Davos box strategy. You can register for it. We don't do all the English webinars, but this is one of it. So let me just copy and paste this link to you guys, right? Very interesting trading strategy. You can check it out. I can see there's already a request for smart money concept. We will take a look at it, right? I'm scheduling next month's webinars, so it could be something that we can arrange for, right? But yeah, it's we're always kind of researching and learning into different kind of trading strategies. And the important thing is that we don't only teach you, right, but we also apply our own professional kind of insights into it, because we know so much about trading. Sometimes when you look at a certain trading strategy like harmonics, because you have an understanding of Elliott wave and Fibonacci, you can break it down a lot better for people, right? But if you don't, right, and you just take everything at face value, sometimes, most of the times rather, trading strategies are all interconnected, interrelated, right? One, what's the word? Harmonics calls it, well, the bat, you got the bat, you got a butterfly, right? But in Elliott wave, it might be a corrective pattern, right? A wave, corrective wave 2, corrective wave 4 pattern, right? Before impulsive wave, right? So they're all kind of interconnected one way or another. But the important thing is that when you widen your spectrum of understanding across these different strategies, right, you can actually get a better insight into how to use it, right? You're like, okay, I'm going to use maybe, for example, the Wyckoff trading strategy. I can combine it with a little bit of my Elliott wave knowledge, a little bit of my knowledge with correlations, right? And maybe I can tweak it to be a scalping strategy, and we see how it works. Okay, so that's the very interesting thing when we're exploring all these different kind of trading strategies. Okay, now back to the show. All right, so yeah, today's trading strategy series, we're going to cover the Wyckoff method, right? Disclaimer first, of course, everything in this webinar is purely educational in nature. Please do your own due diligence before you guys trade. Yeah, please do your own due diligence before you guys trade. All right. The agenda for today, right? The agenda for today, right? First, you're going to touch on what is the Wyckoff method, jumping into really explaining and understanding it, right? And then we have some suggestions. We have some suggestions on how we can further improve it. I know it's a little bit bold to say that we can improve on this, but based on all the knowledge we have in trading, here are some suggestions we have on how we can actually improve it. And then the fun part is where we start to apply it, right? Apply it in trading. Desiree, nice to see you tune in, right? I thought you wouldn't be tuning in. I can see you over there. Okay, but anyway, nice to see quite a number of newcomers too over here, right? Today's session is you can't keep quiet. I literally have the attendee list open here, so I can see anyone who kind of tries to sneak in. All right, now without further ado, I'm going to introduce the host for today, right? It's a new guy. You might have seen him around in the IC VIP room, right? His name is Yongjin, right? He's our newest member at Everest Fortune Group. And of course, you guys know Everest Fortune Group, we're award-winning research team, best 2019, 2020, 2021, best FX and best equity finalists for best FX and best equity research. We work in many major financial institutions, right, forecasting where the markets are heading. And we have a special partnership with IC Markets where we bring you guys the good stuff, the juicy stuff, the stuff that will take our trading to the next level. Okay, and in today's series, right, we're actually going to look at Yongjin rather is going to present the Wyckoff method to you. Okay, it's one of his first few times doing a webinar, right? He's always in the background doing the research. Now he's going to come on, he's going to present. So go easy on him, right? Why go easy? At the same time, don't hold back your questions, because the Wyckoff trading strategy is one of the trading strategies, and I guess coming from me, it's one of the more impressive ones I've seen. It applies a lot of what I've seen across the not only like the kind of horizontal pullback and overlap levels we're looking at. It also utilizes a little bit of Fibonacci, right? But yeah, it's very interesting. It's one of the ones that I really respect. There are those useless ones which I think like the guppy, that kind of guppy moving average and stuff, right? But the Wyckoff one is very advanced, really impressive. So don't hold back on your questions, right? Do ask him, right, as much as possible, right? Of course, go easy on him. This is one of the first few times he's doing a webinar, right? And of course, without further ado, right, Yongjin, you can take over, have fun, right? And let me know how it goes later.
Okay. Hey, hello guys, hello. Wait, give me a moment to settle down. Hi, wait, hello guys, how you guys doing? Okay, so today I'll be presenting the Wyckoff method. I'm sure you guys are very interested. Hey, hello. Hey, thank you. Hey, this is actually my first time doing on IC markets, Please go easy on me. Okay, but don't hold back your questions. I will try to answer them. Okay, let's start. What is the Wyckoff method? Okay, so as you know, this guy, okay, everything will be okay. Thank you very much, Simon. Thank you. So this guy is Richard Wyckoff, Richard D. Wyckoff. Just for you guys to see his face first. Next. Okay, who is he? He's actually considered one of the 5 titans of technical analysis back then. It's actually 100 years ago. He has passed away in 1934. So he actually wrote and edited the Magazine of Wall Street. And he also founded the Stock Market Institute school where he actually taught people how to trade the stock market. So my obsession with Wyckoff, I'm actually pretty obsessed with him. I actually borrowed a book. You guys can check it out. It's called My Secrets of Day Trading in Stocks. It's written by Wyckoff. So later I'll get more into it on this book. So, okay, Wyckoff likes to call it, in the market, he likes to call it the composite man. So for him, he thinks that the composite man is somebody who is in a market, is like the market maker. He's just a secret person behind. He carefully plans, executes, and concludes his entries for the market. Okay, next. Okay, so for Wyckoff, he has the 5-step approach to the market. He actually determines the present position of the market. So whether it's, later I'll get in depth into it, whether it's accumulation, distribution, reaccumulation, or redistribution. So he usually will select stocks that are in harmony with the trend. He also selects stocks with a cost that equals or exceeds the minimum objective. Okay, I think I will skip next. Okay, understanding the Wyckoff method. We will get into the action how to implement Wyckoff into the market. I've been doing it for the past 1 year and over. Okay. Okay, so the Wyckoff price cycle. We usually start off with the accumulation area. Let me write it out. Pen. Accumulation area, where price slowly accumulates, and all of a sudden there's a sudden spike in movement before it goes up, and then it distributes and it marks down. So normally what I like to see is a equilibrium, the 50% mark, when it marks down, 50% area. Okay. Okay. The 3 Wyckoff laws are the supply and demand. It determines the direction of the price. The law of cause and effect, what causes the price to go up, where you can actually, I'll get in depth with the volume indicator, and the law of effort. Okay, let's head on to improving on the Wyckoff method. I'll be jumping right into the technicals part. Okay, so if you search Google, you can actually find this schematic. It's like a blueprint. So actually Wyckoff, Richard D. Wyckoff, he actually did not invent this PS, whatever you guys see on the screen, the short form, PS, SCARST, all those. He actually did not do the blueprints out. It's actually people whom he taught, they start to implement their own way of how Wyckoff actually saw the market. Okay, I will show you guys an example of accumulation on the market. What does it mean to, I will type everything out so you guys can screenshot. So sorry, okay. Okay, let's head on to the chart. We'll start with euro dollar. Okay, as you can see, I was doing Wyckoff here. I was doing some kind of checking out reaccumulation. Okay, let's jump right in. Oh, so sorry. Okay, starting off the Wyckoff method. For accumulation, we'll be looking how the price actually accumulates. As just now, I already drew. The price will go zigzag, zigzag, and then suddenly there'll be a huge movement before it distributes, the distribution zone, before it hits back down. Okay, what is the smallest time frame that you use Wyckoff with? Honestly, I actually did it on the 30 seconds. Believe it or not, I did it on the 30 seconds. 30 seconds, 1 minute. Okay, I will actually do it on the larger time frame today because the smaller time frame is actually harder to see. EU right now is reaccumulating. Oh, we'll get right into it later on. So I will be introducing the accumulation blueprints or schematic first. So let me write everything down first. So we actually have PS, preliminary supply. Okay, sorry. Preliminary supply. This is the schematic. Let me write everything down. Schematic for Wyckoff accumulation. Preliminary supply. Then next we have the selling climax. Automatic reaction, AR. I will write everything down on the chart later. Give me a moment. Automatic reaction, ST, secondary test, STB, secondary test in phase B. Next we have the spring test and the LPS. I will show you guys how to use it on the chart and how to enter using Wyckoff. Last LPS means last point of supply. Okay, do take note of this down. Take note, it's very, very important. Okay, let's get right into it. Okay, so for this area, you guys can actually see price accumulated and then it shot right up. So how do we draw it? Let's start off with the PS, preliminary supply. I have to go on a smaller time frame, give me a moment. Okay, so what you'll see now, I'm on the 15 minutes chart. So Wyckoff, basically you start with, okay, let me pull it down. Okay, you start with the preliminary supply. I like to mark it out first, PS, preliminary supply. After that, we will have the selling climax, SC. After the selling climax, we have the automatic reaction where price shoots up and it breaks the PS. So I'll write this down, automatic reaction. After the automatic reaction, we have the secondary test, STB, ST first, secondary test, and then the secondary test B. Secondary test B, spring. I will get into details. Spring, and then the test, and then the last point of supply. I only enter Wyckoff on the last point of supply because I like the quick movement where it immediately shoots right up for accumulation. Okay. How do we determine an area as a test or an area for last point of supply? What I like to normally look for is price goes up high enough, and the secondary test is actually a very, very small area. You will look at this, it's actually very, very small. So what I like to look for is price to go down, maybe clear an area. I know you guys, some of you guys actually use smart money concepts. Just now I heard about it, smart money concepts. So you guys actually find a block. When you search for the test will go down and it will slowly go side to side before it shoots up. But when it shoots up, do not have a fear of missing out, because according to the Wyckoff schematics, the blueprint, price usually comes back down at the last point of supply. So how do we find like this area? Why did price actually touch here? Usually, I will look for the market imbalance. Market imbalance. Let me write it out. Market imbalance. You can see actually there are many. Market imbalance here. Market imbalance here. It's everywhere. But how do we choose the right one? So to do this, I would. Can you hear me? Testing. Can you hear me? Diana? Yes, can. Okay. Sorry about it. Thank you very much. Okay, so what I like to do is I normally draw a feed from the bottom of the test. A feed from the bottom of the test all the way up. And what I like to see, it's the golden Fibonacci level, the 61.8%. Let me draw it out. Sorry, the 61.8%. This line. I do not enter directly there, so I like to draw and I will double check and double confirm. The voice is dissiping. Okay. So sorry about it. So when at this area, I like to search for the market imbalance. The market imbalance here, just right, it coincides with the 61.8%. So I'll write this out as, for you guys to know, market imbalance. Oh, so insight. So sorry. Okay, the market imbalance on the 30 minutes. How do we tell what is market imbalance? What is the characteristics? Okay, that's a very, very good question. As you can see, this area, I'll zoom in carefully. This is on the 30 minutes chart. So there is this area, it shorts up, price, the wick has not come down and touched into this area before. This is what I consider a market imbalance. This area too, you can see, there's no other candles that have come into this area, especially the wick. So what I determine as not a market imbalance is when the price actually came back down, tapped in, and it goes up. So this area would be no longer an imbalance. So as I was saying, this area, it coincides with the 61 point, okay, thank you, okay, thank you. It coincides with the 61.8% on the Fibonacci. So it gives me the confluence that price will reflect off here. So to enter, this is on the larger time frame. I normally do, when it filled the imbalance, right? Yes, it came back in, the wick touches the imbalance. So what I like to do is, great topic, thanks. Can we have the recording, please? Okay, later I will get with Desmond on that. So normally I will have an entry here with my stop loss always below the test, because the test is a protected low, always below the test. But normally when I first started Wyckoff, due to my inexperience, I normally would pull my stop loss below the spring all the way down. A much safer stop loss will be below the spring. But for normal conditions, you can just put it below the test will do. But what will be confirmation, candlestick pattern, or something else? For Wyckoff, you just follow the schematic of this. So let me write it out. SOSB. SOSB means after test, SOS sign of strength. Could the low of 1st September be the PS? Sorry, give me a moment. I'll just do the schematic out first. Could the low of 1st September? No, it cannot be the PS, because the PS is usually just a small reaction, a very, very tiny reaction. It's just a small area. So the automatic reaction will usually cover and break past the preliminary supply. So I will actually consider the 5th September area to be the PS. Okay, please screenshot this area down. Screenshot. Please screenshot first. Usually paid mentorships actually teach you, you actually got to pay those mentors and then they teach you the exact same thing I'm teaching. Okay, please screenshot this down first. We can actually, okay, thank you. Screenshot this. It's very, very important. Normally, I do not do Wyckoff on the large time frame. I usually go to the 1 minute, 5 minutes chart, because since I'm day trading. I'm sorry, give me a moment. Okay, let's continue. Okay, we will find a clear distribution, a very clear distribution now. Or do you guys want me to go down to the smaller time frame for accumulation? Let me know before I continue. Smaller time frame, sure. Smaller time frame. Let's check the current day. Okay, so let me show you guys what I like to do from day to day. Yes, lower time frame. I do it on the lower time frame. Let me show you guys what I will do first on my day to day. First, normally I like to go to the weekly. I would like to mark out the weekly high and low. How do you identify PS? Okay, I'll get right into it. Okay, first. So normally what I like to do first before I start trading any currency, I like to mark the high and the low of the week. And I'll label it out. Weekly high. And then weekly low. These areas actually act as a form of resistance or support. And it's actually very strong, the higher the time frame is. So weekly high, weekly low. Let's get to the daily. Same thing, I will mark out the previous daily high and daily low. And change colors too, else you will get confused between the weekly and daily. So maybe let's use orange. And the text, we'll change it orange to daily high and then daily low. Oh, so sorry, this, okay, daily low. I like to make it neat. Okay, so by the way, you'll be thinking, how come my line actually sticks to the candle? You can actually use this magnet tool. You turn it on and you will just stick. Or you can actually use a shortcut and hold the control key on your keyboard. So you are marking the previous weekly high and previous daily low, high low, right? Yes, I'm marking the previous weekly high and previous daily low. Okay, thank you very much, Desiree. Okay, so let's go back down to the smaller time frame. I'll start with the 5 minutes. Okay. This is an example of a trade that I actually took yesterday on the 19th of September. I actually do have the screenshot, but it's not on this computer. Before the before and after. Okay, let's go to the 1 minute. A small time frame accumulation, which I actually took yesterday. Okay, so yesterday I saw how did I actually spot out this area? I actually used the fib. So you can actually use the fib, draw from the bottom row to the top. So I actually waited for price. Remember, I always wait for price to come down to the 61.8% golden ratio. As you can see, the accumulation happened here. This is a live trade that I actually took personally on my personal account. Let's go here. First, I would like to start off with the preliminary supply, PS. So someone was asking, how do I identify the PS? Cornelius. Okay. Oh, it's so small. Preliminary supply. What I don't usually mark out the preliminary supply first. I usually mark out the selling climax first, and then the AR. I like to see the price actually react violently, very, very violent. It suddenly shoots up like damn. And then I will look out for the previous area before the selling climax. This area. I'll just mark it out as the PS. Preliminary supply. So after the preliminary supply, I was saying we have the secondary test. Secondary test. Secondary test B. STB. I would just like to do short form. STB. How do you identify SC? I normally identify SC first. Okay, you can actually use the volume indicator. I used to use the volume indicator at the start. Volume. Let's use the volume. So okay, this area is the spring before I mark out spring. Spring normally has a very, very huge volume, as you can see here. Spring. Very, very huge volume, surging upwards. Okay, so how do you identify SC? I thought that particular zone is consolidation. No, for Wyckoff, we will see it as the accumulation of orders. Orders normally slowly accumulates before it goes up. Normally, I would actually, last time when I was doing the other rectangle, all those methods, lines, I would set this as a no trade zone. I used to actually draw out this area. I normally will mark it as no trade zone. But ever since learning Wyckoff, I don't see this area as consolidation anymore. It actually takes time. Yes, it's a no trade zone. Normally, I would see it. I would actually mark it as no trade zone, but I personally took the trade here on this area. So yesterday I actually waited for the spring, the huge volume. It surged up. It broke structure. Where did it break structure? It broke the STB. So I like to draw a line, a dotted line, and I like to mark X on the top. Just make it very, very clean, so you know the exact area where structure was broken. Why I actually said to take, wait, give me a moment, wait for wait for price to go back down first, and then I actually mark this area as a test. I waited for price to break the test area. So this entire zone to me, it's the test area. I'm waiting for price to break upwards. So I will draw an X again to make it very neat and clear. So I'll know where's the area. So why did price actually give me a moment? This accumulation is within 1 hour OB with a big order block with a big imbalance. Oh, so sorry, I actually don't use an order block. I just use the Fibonacci with confluence, and then I combine the Wyckoff blueprints. So actually price actually went back down. Oh, so sorry, I need to use the brush. Okay, price actually broke down and it cleared the test. If I actually entered somewhere here and then my stop loss was here, I would have been stopped out already. So normally I would like to place my stop loss below the spring, right below here. I will never get stopped out. Else it also gives me time to actually manage my trade. So I personally entered here yesterday. I'm finding the rectangle. So actually what I would call it a breaker block, or you guys can actually research about it, or you can actually enter through an imbalance, market imbalance on the small time frame. So you can see the market imbalance is here. It's very, very small. Let me zoom in. Can you guys see it? Can you guys see the 1 minute market imbalance? No other candles have came in before. Too much noise on lower time frame. What is your RR? I normally would try to aim for 1 to 2 or 1 to 1.5 RR. Yes. So I actually entered here. I had my stop loss all the way below. So for Wyckoff, I constantly got to adjust my test area. So I actually held the trade. So sorry, held the trade. And I actually closed it off here. Later, I'll explain why I closed it off there. It's actually an interesting concept. So this RR, which I took, was actually 1 to 1.86 risk to reward, not the very best. Okay, so actually, when the price went lower, I actually readjusted the test lower. And when price broke this area, I immediately drew one more break of structure. It's very, very advanced, Wyckoff. It's very, very advanced. You guys actually need time to back test and continue drawing the schematic over and over again. Is this the same as supply and demand zones? You can actually implement, it's actually from smart money concepts, right? Supply and demand, you draw the box. You can actually do that. But what I notice quite often, price do not actually come down to the supply and demand zones. Hence, we have the market imbalance zone as the area we enter. It's either, as Wyckoff also said in his book, it's either you get on the train, you try to get the best risk to reward. You try to minimize it down so you can have a nice 1 to 5 Instagram type of risk to risk, 1 to 5 Instagram type of trade. Please don't do that. you will probably miss the trade. I've done it many times trying to minimize my stop loss, minimize everything, and then I actually miss the trade. So I'd rather get on the train than to not get on at all. So once price actually broke the test area, I immediately broke even my trade. But why did I take profit only at here? Why is it so specific before price actually broke back down? Why? Let's look to the left. You can see, okay, this is derived from smart money concepts. I actually take some concepts about liquidity from smart money. So what I like to do is I find equal highs. You can see this area, these two candles are of equal highs. So it's like the liquidity area. Let me find the money. Liquidity area. Price broke the equal highs and immediately rejected it down. Previous swing high. No. I'll look for the liquidity. You can search. Let me write it down. You can actually research online. It's a very, very cool concept. Equal highs, and there's also such thing as equal lows. It's actually derived from smart money concepts, the concepts of liquidity. We will not be getting into smart money concepts today. Okay, thank you. So I actually took the trade up all the way to the equal highs, and then I close it directly, exactly at that area. So I got a 1 to 1.83. Minimizing the risk can be more worth than taking more entries due to RR. There are different strategies you can try, but Wyckoff tried to reach high RR many times. Yes, I've personally seen some Instagram traders that have done pretty well, 1 to 10 RR, but I would like to keep it safe. Personally, my risk appetite, I would just like to get on the train with a high stop loss, so I won't get stopped out and get a nice small profit. I'm not greedy on my risk to reward. Okay. Okay, let me read the questions. Too much noise. Okay. I'll turn off the volume first. Okay. And then after I took this trade, I actually left the market yesterday. So if you actually continue drawing this entire area, it's the test. Test is a test area. So this area, let's continue drawing, is the last point of supply. As Wyckoff always say, can you hear? Testing. Can you hear? Okay. Somebody said no sound. Maybe you should try turn on your speaker a bit louder. Okay, thank you. Can. Thank you for confirming, guys. Thank you. So as I was saying, the schematic, after the test, we'll have the last point of supply. Okay, so I see actually there are quite a few people who just joined. Let me copy the text over. Give me a moment. Okay. Put this in. Okay. Okay. Do you trade only on lower time frame, or do you go to higher time frame too? I use the higher time frame for the Fibonacci. So I usually want to find the 61.8% golden ratio. The golden percentage, I mean. So sorry. Okay. So for those who have just joined us, please read. Okay. So for those who have joined us, please just record this down. In case you don't understand what's all these PS, SC, AR, ST, STB, Spring. So since we actually are following the Wyckoff schematics, I will start continue drawing. Sign of strength. Last point of supply. As I was saying, I after I took this trade, I just left the market because don't overtrade, do not play the market. The market is not always in my favor. So the price went down, last point of supply, and it just shot up. So for this, we actually know where are we on the market. This entire area, mark out, accumulation. is the accumulation phase. So what this phase is, it's the markup phase. Markup phase. So we know our position in the market for Wyckoff. Wyckoff, we are currently going upwards, upwards, upwards. And I can see here the price has actually distributed after it went up. What level is this? Okay, we can start. Since we are right now we are done with small time frame accumulation, we can start with distribution. I got to find a very clean. Okay, let's go back to the slides on distribution. Okay, can you guys see the slides? Hello, can you guys see the slides? Yeah, okay, thank you. Okay, so sorry, it's my first time doing this. Okay, thank you very much. Okay, let's go on to distribution. Distribution is slightly more complicated. I have actually friends in real life who actually, okay, thank you very much, thank you. I have actually friends in real life who I tried to explain distribution to them, and they actually took a very long time to actually spot the distribution schematic. They can't really see how they could have entered on the last point of supply. I'll write everything down again on the chart. Okay, just keep this in mind, screenshot first before I carry on. Okay, I'll give you guys a while to screenshot. And this also can be found on Google, so no worries. Okay, let me go back to the chart. Oh, on distribution. Okay, let me find a very clean distribution so that you guys can actually learn from it. If the distribution is not clean or I don't see the schematic, I wouldn't force a trade. Do not force the Wyckoff schematic. Don't try to force, like you try to adjust SOS or AR just so it will fit. Make it seem it's very flowy. It's very, very nice. Let's find a small time frame. Give me a moment. I want to find a very clean one for you guys. Okay, this is a nice example. Let's go to the 1 minute. Thank you for the webinar, but have to go. Good luck and thanks. Okay, thank you. If you are doing 1 minute, 15 minutes, will you have to be glued to the screen? No. No. I usually don't glue myself to the screen. You can actually set the alert. If you are using TradingView, I'm sure the free version, there is the alert section. You can add an alert once price has hit the 61.8% level, then I'll come and check. Normally, I'm away doing my own work. I got a lot of research in the office to do, so I don't have time to just keep staring at the chart. Let me find the nice distribution to explain. Give me a moment. Okay. What I want is a very, very clean distribution. Okay, this is a prime example. This entire area. This is on the 1 minute chart. Okay, so let me first write down the Wyckoff schematics for distribution. First, we have the PSY, preliminary supply. I spelled it wrong. Next, we have the BC, buying climax. Next, we have the automatic reaction. After that, we have the secondary tests. It's actually pretty similar to accumulation. Instead of selling, we have buying. Since it's upwards, secondary tests. After secondary tests, we have UT. UT is up trust. I'll draw it out on the chart so you can see in a while. After uptrust, we have UTED. U up, it means up trust after distribution. After uptrust, after distribution, we have the SOW. Opposite of SOS. SOS just now for accumulation is sign of strength. For SOW, it means sign of weakness. After sign of weakness, we have the test. And then the LPS. It's actually very similar to accumulation. Last points of supply. Okay, let me draw it out. This is actually a very, very clean example. Very clean. So first we have the PSY, same thing as I was saying. After PSY, we have the buying climax. After buying climax, we have this large movement, automatic reaction. We get the brush. Automatic reaction, very, very big reaction. Automatic reaction. Next, we have the secondary test. And then next, we have the UT, upthrust. After upthrust, we have the upthrust after distribution. Wyckoff is really a very technical part of trading. It's not for many people. Okay. So after upthrust, after distribution, what I like to look for a very clean distribution, I do not set my break of structure here. I do not. I normally wait for price to break the automatic reaction. It's not too late to enter too. Let's see. Break of structure, it broke the automatic reaction. Went back up, test, and it's the same thing. I do not know when the test will end. So what I like to look for a very, very nice Wyckoff is for price to at least clear 50% the equilibrium. So it goes up at least 50%. 50%. I have my set of trading rules for Wyckoff, at least 50% for the test. Fibonacci, okay, test. Let's draw test. So after the test, I usually like to wait for the price. Same thing, I'll set an alert. I do not just stay there. Look, if I actually stare at the chart, you're asking if I will be gluing myself to the screen. So it's actually from 8:52 Singapore time all the way to 10:06. So between this timing, it's a span of 2 hours. I cannot be staring at the chart for 2 hours, right? So what I like to do, I like to set an alert. I like to set an alert for the price to break here. So once price has broken here, I'll draw again. By the way, you can actually hold the control key, press on any of the drawings, and then it will just copy. Hold control, click, and pull. And then I like to use the magnet tool, have a very clean. So this line you will be thinking, how do I adjust it to make it straight? So normally I see some people, they like to slowly draw and try to pull it. You can actually hold the shift key. You see, the moment I tap the shift key, it becomes straight. Okay, so shift, straight. Same thing, next I'll look for the market imbalance. And for liquidity, same thing, equal highs, top, equal highs, price has to break this area. And then here you can see the market imbalance. Let me draw it out. Give me a moment. Okay, it's actually very, very small. I got to zoom in. Okay. I write it down. Market imbalance on the 1 minute time frame. In center. Okay. So if it was me, I would preferably wait for the price to go up, clear this area, and also tap into the market imbalance. So I'll have my entry here at the market imbalance area. Or you can actually enter here in case price rejects down. As I was saying, it's either you get on the train or you don't get on at all. I'm so sorry I missed this. Do you have a recording? My email is okay. Later you can actually there's the replay should actually be uploaded to YouTube. What's your email in case? I really want to see this. Okay, let me record down your email. Give me a moment. Okay, I'll get back to you after this. All's good, all's good. Okay, so as I was saying, I would rather get in at a bad RR or I do not get in the trade at all. So I personally, if I saw a liquidity zone like this, I would have entered here already because of the equal highs with my stop loss above the test. If you are unsure and you are very afraid, especially this area, it nearly broke, it nearly hit the stop loss. As I was saying for accumulation, Same as accumulation. If you want a very, very safe bet, you can set your stop loss all the way up to the UTET instead of the test. Okay, so for this, let's see the test goes up. And this is the Wyckoff schematic, last point of supply. After last point of supply, as you can see here, just in case, okay, price went down all the way, cleared, and it went down even further. This is a very, very nice example of the Wyckoff distribution. It's a clean one. What I like to look for in the market every day is a very clean distribution or accumulation. Guys, please screenshot this. Please. Oh yes, before I forgot to mark out the sign of weakness. Normally after the AR has broken, before the test, we'll call this area the sign of weakness. Because of, as you can see, it's a break of structure. Okay, please screenshot this down. It's very, very important. Always search for a clean blueprint if you are using Wyckoff accumulation or distribution. I'll give you guys some time to screenshot first. Okay, and this is the 1 minute time frame. 1 minute. Okay, please screenshot. Okay. Okay, thank you. Thank you. Okay. Next. Please actually spend time. Please, as one more tip about Wyckoff I would like to tell you guys is, please actually, so you enter after identifying the LPS, or you already entered before that when you mark. No. I saw this area, but then I would have set my sell limit. I would have set a sell limit. Here. At this exact line. Very exact line. So I will wait for price to actually come back up. But my stop loss, I usually put it above the test. Always, I usually have a sell limit. I do not just, if you're actually very, very busy, you know, like you don't have time to actually wait and then check the market, you can actually set a sell stop here. Sell stop. Just with your. So what's the purpose of finding the LPS since you already entered a sell limit? Oh no, for Wyckoff, we are actually looking for the schematic. We don't have to find the LPS. The LPS can go anywhere. So we just know that we are safe. We have already entered. It will take some time. LPS, it will slowly move up, move down. We are just drawing. It's just drawing out. It's the blueprints. I know after the test has been broken, there's always the last point of supply, but this is a protected high. So I'll just set my stop loss there and let it run. Let the trade run. I actually use Wyckoff on a day-to-day basis. I only look for very, very clean setups like this. Extremely clean setup, then I will enter. Please do not do things like, you know, setting your stop loss here, like over here. You see, you got stopped out. Why you got stopped out? This area. Do not do this. Do not do this. You will get stopped out. Why? Because there is an equal high. Why went back up? A near equal high. You can read it up on smart money concepts. Smart money concepts. I saw you guys are requesting for smart money. The RR would be better if you enter from LPS because it could. Can you please rephrase your question? The RR will be better if you entered from LPS. The thing is, you cannot predict. Okay, you cannot predict where the LPS will go. The LPS can go from anywhere. Let me draw. You can go between this area, anywhere between this area, the last point of supply. So you'll just enter with your stop loss above the test. You do not predict where the LPS will be. You just let it run. Trust the Wyckoff schematic. Psychologically wise, at the very start, if I actually saw price going up here, all the way up, nearly hitting my stop loss, at the very start, I would have already closed my trade. And then I will actually see, oh, it actually went back down and I was right all the time. So now I will just trust the Wyckoff schematic. And your drawing must be right also. Screenshot this down first. Screenshot. Very, very important. There are many, many people who actually charge you just to teach you this schematic and how to use it. How can I get more info on smart money concepts? You guys can actually check on YouTube. I wouldn't promote anybody, or I wouldn't promote any mentorships, but there are free ones on YouTube. Thank you, Yongqing. You're really good to share. Yes. Wyckoff is actually something not many people will be willing to share. I've actually know a few Singaporeans who actually charge just to teach Wyckoff, but I would rather teach it for free. Cause why not? Please borrow this book. I actually borrowed this book from the National Library. It's called My Secrets of Day Trading in Stocks by Richard Wyckoff. He wrote this book before he died in 1934, and it's already 100 years, nearly 100 years past, and his concepts still work on the market. He actually originally had his concepts for stocks, but it wasn't for forex. But people in Wall Street, they actually tried it, and people in forex tried it, and then he actually have a very, very huge following. Do you know what your win rate is for this strategy? That is a very, very good question. So that's why I always say, I will emphasize, aim for a high risk to reward. Do not aim for a 1-to-1. If you aim for 1-to-1 and your win rate is lousy, overall you'll be in a drawdown. So let's say I have let's just give an example. I have a 40% win rate. So let's say I'm not good. I'm entering 4 out of 10 times my trade wins in a profit. But out of the 6 times that I lost, I only risk 1%. 1%. Risk 1%. So 6 losses equals to 6% loss. But due to my 4 out of 10 winnings, I aim for 1-to-2 risk to reward. 1:2, so 4 times 2. Let's say it's just an example. 4 wins with 1-to-2 RR. It will equate me to an 8% profit. So minusing off my loss, 8%, 8% minus 6%. Overall, I'll still be profitable, although my win rate is below 50%. So always try to aim for a higher win rate, or risk to reward, I mean. Win rate doesn't really matter if your risk to reward is able to cover. Always calculate this area up. Okay. You guys, please screenshot this. I'm coming to the end of my session. If you guys got any more, can you use Wyckoff for 1 hour or higher time frame? Yes, you can. But personally, what I've noticed is not that clear. So I like to do Wyckoff on the daily intraday. Wyckoff on intraday. I don't do it on the higher time frame. Are there any MT4 indicators? No, there is not any indicators. That's why I was saying Wyckoff is extremely, extremely technical. Can you share where is your TP for this scenario? Okay, I'll not look to the right. Let's take a rough look. What I like to do is, maybe I like to aim for the previous swing low. As you can see, this area has a, give me a moment. This area have a very big reaction. So what I like to see is the previous swing low to be broken. So maybe let's draw a line. And my entry. Let's do a back test. Let's see how it goes. To the take profit. Okay, 1 to 2.6 risk to reward. Let's do a back test. A replay. Let's go. Price goes up, tapped in. Let's watch the previous swing low. I'm aiming for that. Price almost hit the stop loss, goes down. Let's go. I would have broke even my trade the moment if it breaks this line. Have broken even. So if price goes back up, do consider the commission too. I think it's taking a bit too long, so sorry. I think I'll just stop this replay. Let's see. Let's see. Oh my. See, price has eventually cleared the previous swing goal. It took quite some time. How long did it took? Okay, it took actually 1 day. So I will have broken even. How I would have managed my trade is I will have broken even at this area, and then I will have already taken some profits. So it was psychologically, I will take my mind off the charts of the market. So I have maybe taken 80%. How I manage, I usually take 80% of the moment it broke structure. I'll get the remaining 20% run. So if it breaks even, break even, let it be. I have already taken profit. It's fine. I do not care if the price actually reverse back up, break even. I've taken 80%. Psychologically wise, I'm fine. I can do whatever I want. I can leave the market. So thank you very much, Yongqing. Very interesting session. Yes. If you guys have any more questions, you feel free to email IC Markets. Feel free. Okay. Thank you for joining me today. I'll end my session. I think we have went over time on it. Thank you very much. And thank you for supporting me. Need to retest and comprehend more. Yes, please backtest this, because for Wyckoff, every single currency pair is different. It does not always have the same shape, the schematic. Just do backtest very often. I backtest very often on Euro USD. Thank you. Have a good one too. Thank you. Hey, bye. Thank you for joining. Have a nice day, guys. Bye.